Hello and welcome to the Market Huddle for Monday, August 2nd. Hard to believe it's August already. Years flying by quickly. I'm Nate Zeller, the Chief Investment Strategist here at Secure Retirement. And today we're going to be talking about some investment themes and trends and how we incorporate that into our portfolio management process. So let's go ahead and dive right into it. The first one that I have here is our disclaimers, which we show every week. This is required by the attorneys, of course. These information and opinions are subject to change without notice. All types of investing involves risk, including the potential for loss of principal, and there are no guarantees. We also do not provide tax or legal advice, because we're not accountants or attorneys. I don't think that that'll come into play today. One thing I did want to mention, though, is that we may mention some specific company names, and everybody's situation is different. So if you're thinking about investing, please consult with us, and we'll want to review your situation on an individual basis. So let's get into it. Today, like I mentioned, we're talking about trends and themes. A trend, let's start out by defining what these are, and we're going to dig into each a little bit deeper. A trend is a general direction in which something is developing or changing. So oftentimes we see market trends where they're moving one direction or another, up or down. Generally, of course, we're looking for those movements upwards. Themes are a little broader there. When we take trends and try to capitalize upon those based upon the predictions of which way we think the trend will go, these are a little larger, and I think we're going to spend a lot of time today talking about the themes and some of the larger themes that we see happening out there. Everybody gets so focused on the short-term trends that sometimes it's good to step back and look at the larger themes, determine how it can best fit into your investment portfolio, and what we can do to profit from these longer-term themes. What I really want to discuss or drive home here is the way that we incorporate our themes and trends into our portfolio management process. It's not the only driver of what we do. This is more of an overlay. When we look at individual stocks or even sectors, we step back and think about, okay, how will these trends affect what's going on? It'll at times make us maybe move to one sector or select a stock. On the other hand, it might make us stay away from a particular stock. So that's why it's important to use this in our overall process. Sometimes some managers just look for, say, strictly value companies that might be undervalued without thinking what the implications are for that particular stock or that sector in the longer term. An example I'll throw out there is Kodak, Eastman Kodak, which 20, 25 years ago was a great value company for many years. Or a great value company. And I saw a lot of value managers using them in their portfolios. However, if you look at the longer term trend there, people were moving away from film. And for those of you watching today, I'm sure many of you remember what film was, how we used to take pictures. You take it to get developed and get it back. Now we just use our cameras and we no longer need that film. So that's why it's important to use this as part of our investment process. So currently, we're going to briefly touch on a few market themes before we get into some of the longer-term mega trends, as we call them. So right now, what we're looking at is the continued growth from our post-pandemic recovery. This has changed a little bit in the last couple of weeks. There's been a little more emphasis on what might happen with the outbreak due to the Delta variant. So many people are concerned in what impact that might have on the markets. The markets so far seem to have shrugged it off and continue going upwards. I just saw that the Dow hit an intraday all-time high earlier today. So the market seems to think, all right, and we're continuing to grow from what happened to the economy last year. I think everyone's aware of that. So dig into that too deeply. It's been supported by accommodative monetary policy, which is from the Fed. They met last week and decided to keep interest rates low, and they're continuing to buy bonds, which sounds like it will reduce later this year. We also have very accommodative fiscal policy from all the stimulus that's been thrown out checks that have been written, the unemployment checks coming from the government, and now the talk of the infrastructure bill that both parties seem to have agreed upon last week and is now moving through Congress. The trailer to this, though, is the valuations. This is a theme in the market. We've talked about this a little bit too, where some people think maybe the market's a little overvalued. Have we hit peak growth? Through the business cycle, are we gotten a little bit ahead of ourselves, maybe grown as much as we're going to, and now we see a bit of a pullback, which is part of a normal cycle. So that's not always bad when that happens. And lastly is inflation. We could spend a lot of time talking about inflation, what implications it has, especially for savers and your purchasing power of your money, how it erodes that away. I've been doing this for 20 plus years, and inflation's kind of been in the back burner, and this is the first time where it's become a major theme in the market and something we need to be aware of and watch more closely. But with that, there's also a lot of opportunities that present themselves. What I want to spend the rest of the time here talking about are long-term trends. I call these mega trends. So these are major movement. They're trends emerging, and we call them macro environments. So these are at a very large scale, and the impacts, are multi. There's large impacts on society, the economy, and really what we're concerned with are investment opportunities. There's other trends happening out there that are maybe a little more difficult to capitalize on. And so we're most concerned about those trends that we can profit from and how it impacts investment portfolios. One recurring theme we'll see here too are that these trends oftentimes are interlinked or interact with each other. There's certainly a lot of overlap, and some tend to lead to others. We'll quickly see. And with the thought, again, being that we can, exploit these themes, these mega trends, to earn a profit. However, we want to do it in a conscientious manner. We don't want to be speculative by any means. These are large themes. We also want to use it as risk management, like I talked before with the Eastman Kodak example. There might be things where we see a longer term theme or trend playing out and would make us step back from an investment that we might otherwise make. On the other hand, we are looking for those things those investment opportunities that we consider or we think will provide growth going forward. A few things I will mention too is these are, like I said, very large scale. Also, we expect these to play out over many years. So really, we're looking ahead to the next decade. The market themes I was talking about a few minutes ago are more immediate. That's kind of where we are today, what we expect to happen over the next quarter or two, and those obviously are more static or changing, more dynamic and changing, whereas the mega trends are something that are a little more static. Obviously, they're evolving and changing all the time, but we expect it to be much larger, have much broader implications for the world and the investment opportunities out there going forward over a little longer period of time. And a few examples of this, when you look at the Industrial Revolution, there wasn't a stock market back then, but it had very large implications for the world, for the way that people lived. Here in the U.S., westward expansion, people moved west back in the 1800s primarily. Getting a little closer to the current times, transportation has evolved significantly through the last 100 years, especially 100, 150, I guess, with railroads, cars, and airplanes. When cars were invented and came out, became more mainstream, obviously there was implications for horse and buggy companies. So there was opportunities with cars, but it really dealt a death blow to horse and buggy companies, and of course airplanes, how that has rapidly evolved in the last really 50 years or so. And the last one is the evolution of the internet and what technology has done. This is very specific, probably the last 20 years or so, and is continuing on and will most likely continue on for the foreseeable future as that industry matures and continues to evolve on its own. The four mega trends that we've identified would be demographics, technology, healthcare, and resource scarcity. Within these, there's a lot of others, I don't want to call them minor trends. They're very large trends on their own, but they tend to fit into each one of these categories. So let's go through and touch on each one right now. And then at the end, we'll give an example of how we view these or how we might make an investment decision. The first one, and to me, this is the largest, is demographics. So we're all aware the demographics of the world are evolving and changing. There's a number of things going on under the surface here. So I've called out 3 different ones that will have very broad implications, especially when it comes to investment. The first one being expanding middle class in emerging markets. If you look to China, for example, their middle class has grown significantly in the last 10 years and continues to grow significantly. And this plays into the urbanization, where they've seen an increase of their urban areas, increase of 34% in their urban areas in the last 10 years, a decrease of 24% in their rural areas. It's a pretty big move when you consider that that country has 1.4 billion people as a population. And the thing about the urbanization in places such as China is it's a very dramatic shift compared here to the U.S. In the U.S., if you live in a rural area, you will probably still drive a car, have electricity in your house, internet, cable TV, all those luxuries. Or in places in emerging markets, places such as China, if you live in a rural area, you may not have electricity. You most likely do not have a car. And so when these people move into the urban areas, it's a very significant change for them. And along with that, too, is there's more job opportunities. So we've seen an expansion of the middle class. And with that is an increase in discretionary income and consumer spending. I want to touch on this or go into this one a little more detail right now, too. So people hear this and think, hey, there's a great opportunity in emerging markets. We should be buying emerging market stocks, which very well could be the case. I tend to believe that. The emerging market stocks happen to be more volatile, more risky. And we've seen that there's been a crackdown. The Chinese government's cracked down on certain Chinese stocks the last few weeks. And we've seen a lot of those stocks get hit pretty dramatically. So there's a lot of risk involved. Another way to look at this, though, are what goods and services are these people in emerging countries buying, and many times it's U.S.-based companies. I look at our portfolio right now, we have a few names in there that are seeing rapid growth. They're domiciled here in the U.S. They have very large U.S. presence, but they're seeing extremely rapid growth overseas in emerging markets. And so that's where this overlay comes in, is it's one of the things that we look at when we're selecting stocks that we put into our core equity portfolio. A couple other smaller themes within the demographics area is we're looking at just the shift in population around the world. We're seeing really stagnating population growth in developed countries, such as here in the U.S. U.S., I guess we're still growing, more so in Europe, in Japan. They're not seeing a large amount of population growth, which falls into the fact that they have an aging population and they're just not replacing the population in the same way that countries such as China and India are. We're seeing very rapid growth in the emerging market countries. Another one that I'll call out, India, where we're again seeing a rise in the middle class. India has almost 1.4 billion people. Their projected population is supposed to surpass that of China in the year 2026. So if you do the quick math on that, between China and India, they comprise, it's more than 1/3 of the world's population, and individually, they have more than 4 times the population we have here in the U.S. So obviously the growth there, the prospects are very large, especially from an investment perspective. And that just shows kind of direction that we're going worldwide too. There's a lot of emerging countries that are seeing rapid population growth, but we're seeing that growth really stagnate and slow down in the more developed countries. Then the last thing I'll call out, and so this plays into it as well, is the aging population. We see it here in the U.S., like I mentioned, Europe and Japan are seeing the same thing, and this has implications when it comes to consumer preferences as well as healthcare. The next mega trend that I'll touch on, and this probably doesn't require a lot of explanation, is the digital world, technology. We've seen this going on for good, a few decades. but it continues to evolve, and it seems that the pace of change is getting faster and faster. There's a lot of underlying themes within this one too. You can look at devices and infrastructure. I'll call out payments. I think banking and the way that we transfer money is changing significantly. We've seen that. I mean, very few people, I talk to a lot of people now that don't even carry cash in their pockets anymore because they use credit and debit cards. And then you have things such as PayPal and Venmo where you can just send money to people directly without having to go through any other intermediaries or use a card or cash. Consumer preferences. You look at Amazon, for example, and this was exacerbated by what happened with COVID last year, where a lot more people are ordering goods online, having them shipped directly to their house. There's a lot of, I think it's exciting. I'm kind of a geek. I look at what's happening with automation, robotics, artificial intelligence, the Internet of Things, as they talk about. And then lastly, too, again, as a result of COVID, we're seeing a changing work environment. I think the work environment maybe kind of played itself out from an investment perspective, but obviously that's evolving and changing. That whole area that most people probably hadn't given much thought to 5 or 10 years ago presented a great investment opportunity, and will to a certain extent going forward, but that also plays into some of these other things that we mentioned here. The next mega trend I want to call it is healthcare. Like I mentioned, with the aging population, especially here in the U.S., we're seeing a greater demand for healthcare services. What's driving this as well is the new technology, and we're seeing a lot of digital healthcare, teledoc, for example, those types of things where you see a doctor online instead of having to go in and visit with one. There's a lot of technology too. I look at the COVID vaccination, obviously a little controversial for some, but if you look at how fast they came up with that using that technology, it was much faster than any vaccines that have been developed in the past. So it's kind of mind-blowing. But that's a result of a lot of the work that's been going on, a lot of the research that has implications for vaccines, after the fact treatments. We also look at the gene sequencing that's been going on for about 20 years now that gives us a better idea of being able to read entire DNAs. It's not just implications for healthcare and humans, but that also applies to biology, plants, and livestock. So there's things outside of healthcare that applies to as well. And we're seeing robotics within surgeries. I'm certainly not a healthcare expert. I remember back in the day where when you had to get your appendix out, you went to the hospital and you were out for about a week. And now my understanding is there's laparoscopic surgery where somebody gets their appendix out in the morning and they're back to work in the afternoon. I kind of heard that third hand, so don't hold me to that. Like I said, I'm not a medical expert, but it's amazing some of the advances in healthcare and the technology that we've seen over the last 5 or 10 years. And getting back to the technology, the pace of change seems to be getting faster and faster there. So there's a lot of opportunity. Then lastly, I'll also mention the lifestyle changes here in the U.S. More of our jobs are office-based. We're sitting around, not maybe getting the exercise that we had. It's leading to poor health decisions. There's, some people say there's more carcinogens in the air that we're breathing. They're leading to health, poor health outcomes. On the flip side, people I think are more conscientious of their health. They're doing other things. There's activity trackers, for example, some of the technology. You look at some of the companies that make athleisure wear, I guess we'll call it. So there's opportunities from that side too, which really isn't healthcare. That's more consumer discretionary, but you can see how these all blend together and overlap each other. And the last one I want to touch on is resource scarcity. And this, is very large. A lot of it comes from the population growth that we're talking about. You can see the slide here. The National Intelligence Council is projected we'll see a very large increase in the demands of food, water, and energy due to population growth and urbanization, like we were talking about before. The energy, we'll also mention land. We see this here in the U.S. Farmland is decreasing as urbanization. People are building homes and scooping up some of that farmland. Being used less and less for farmland or livestock. We get back to the urbanization that I was talking about before. And if you think about it, all these buildings require resources to be built as well. So resource scarcity, and then just inflation in general is a way to, the resource scarcity is leading to some of the inflation. So talking about investment opportunities here, it's kind of looking at some of these resources that, we look at what the prices did for, 20 years or so, up until last year when we saw some of these supply chain constraints and the prices, I'm thinking of lumber, that just skyrocketed and have since come back down. We're seeing a lot more price volatility here compared to what we did over the last couple of decades. Which leads me lastly here, I want to give an example of how we might use an investment theme in the investment process too. So if you look at an overarching theme of technology, then break it down a little bit further. Transportation. This has been a very visible topic over the last few years. What's happening with cars? There's a lot of new technology being put into cars. If you get into a car that's 20 years old, it's very different than getting into a car that's out today in terms of the technology available. There's a lot of work with self-driving, autonomous driving cars out there. But perhaps the biggest and the most headline grabbing is the evolution of electric vehicles. What you can do for an investment then is go out and buy an electric car manufacturing company, Tesla being the one that comes to mind. My thought process, that's somewhat risky. We see that GM and Ford, some of your legacy automakers, Volkswagen's another one, are also coming out with their electric vehicles. So it could very well be that we're moving in that direction, but the question is, which company is going to come out on top? To me, Tesla, fascinating company, great company. It's really evolutionized the way that we look at vehicles, especially electric vehicles. The issue I have with it is that the market cap of the company is larger than that of GM, Ford, Honda, Toyota, Volkswagen, and I think Ferrari combined. And it's not that the market always is logical and makes sense. To me, it just seems like it's gotten a little bit ahead of itself. So what are some other ways to look at this? You can break it down even further. This is like peeling back layers of an onion. Say, okay, outside of the manufacturers, so if we buy Tesla, we're betting that Tesla comes out on top, which it looks like they probably will, but at some point you'd have to think that GM and Ford take market share. What are some other ways to invest in this? You can look at the parts that go into it. There's parts manufacturers out there that make the parts that make electric vehicles possible, as well as some of the technology that goes into them. Because these different companies rely upon various parts manufacturers, that might be a little better way to do it versus taking a guess as to which manufacturer will come out on top. And then to go even a step further, we can look at raw materials. And this is where there's some definite overlap with the resource scarcity. According to the International Copper Association, they claim, there's no reason not to believe them, that electric vehicles require 4 times the amount of copper as a regular vehicle. And so they see a significant area of growth there. And copper is used in all sorts of electrical, it's used extensively in all sorts of electric work, getting back to the urbanization where they're having to build more and more buildings that require electrical work, requires more copper. So that's where there's a little bit of overlap when you dig down into these a little bit deeper. So there's a lot of different ways to play the investment themes and take advantage of them. And that's really, I guess in summation, what we're looking at here is we're looking at what do we think will happen going forward over the next 10 years or so, over the longer term. A lot of times we make these investments and maybe they don't do so well month to month or even quarter to quarter, but we think over a long time period, they will indeed play out. And that really, I guess, ends the comments that I had for today. Like I mentioned, we're always glad to talk about your specific investment portfolio. So please feel free to give us a call anytime and discuss your situation. If you haven't done a mid-year review, it's probably a good time to do that. I will also mention too that we are putting together recipes for our cookbook. So if you've not submitted those yet, this is a good time to do that as we're compiling those. We received quite a few, very good response. So thank you to those that have sent those. And please do keep those coming. At this point here, I'll pause and see if there's any questions or comments. All right. Well, if there's no questions, thank you all for joining. Please do join us again next week. And yeah, in the meantime, if you have questions about your portfolio, please give us a call. We'd be glad to discuss it with you. So thanks for joining today.